Good afternoon, everybody. My name is Mike Donahoe from Caspian Insurance. Thank you for joining today's live webinar, hosted by myself and Mike and Shelby from Purbeck. Just a little bit of housekeeping before we start. So you'll see at the top there is a Q&A button there. If you've got any questions on anything that we discussed today, then please bob your questions in the chat box and we will pick it up at the end. So this session is live, but it is being recorded. So if you have any questions on anything, we will be sending the recording out to you on email afterwards. I'd expect it to take about half an hour, and we're just going to cover what are we seeing as insurers at the moment in terms of landlords and the risks that they are protecting. Also discuss the market. What are we seeing changes and behavior wise from landlords, and also a little bit on how we can all make sure that with the right advice you are using your limited company to offset all of your insurances and make sure that everything is done in the right way. So I'd like to welcome my good friend Shelby from Purbeck to join us, and we'll just have a look at the beginning at what we're both seeing at in the market. So Shelby.
Hi Mike, how you doing?
Yeah, very well, mate. Thank you.
Nice to do this. Hopefully, should get a lot out of it.
Yeah, absolutely.
So yeah, prepared a few questions. Just thought we could run through, get your view on it, and maybe have a chat through some of the points. But yeah, so in today's market, what do you think the biggest pressures are that you're seeing on your client base for limited company landlords, and how do you think that might be affecting the lender's behaviour?
I think there's so much going on generally in the UK at the moment in terms of changes to legislation. There's a lot of tax changes in the way that things are having to be done moving forward. Even little things like how the changes to the dividend tax. So there is pressures and squeezes on owners of limited companies over the last few years. You could go back a couple of years, you look at the increase in national insurance rates. So all of that combined from a landlord perspective with the hike in stamp duty, is squeezing the market a little bit. Having said that, the lending is still consistent. The amount that's being lent is good, and we are no doubt seeing existing landlords expanding their portfolios. So, there's a lot going on. There's a lot of, changes coming from a legislation perspective, some of which we'll cover later. But, still an exciting time, still a growing market, and one that, we really see the value in advice in.
Yeah, definitely. I think the government's always going to come out with their changes, no matter who sits there. But there's definitely lots of interesting legislation changes coming in and have been had in. But I don't know. I've go to a lot of these property expos, and the lender appetite, like you said, is very much still there. So many even new lenders springing up, and more of them trying to get into this to the property space. So I think the appetite is sure to grow. But yeah,
Definitely.
good point. What does it mean to be properly protected for you, and what might that setup look like for a limited company landlord, particularly if we're thinking about, let's say you've got multiple properties, perhaps multiple lenders, different streams of debt in there, perhaps a business partner on board. What would a properly protected setup for you look like?
I think for us, I look at this area generally as an area that's underserved. I'll cover it more later, but in terms of advice, so if I look at any portfolio, you want a value in there from an asset perspective, which most will obviously have. And the rest of it then is risk, and it's a question for every owner of those companies of how much risk do you want as an individual? and how much do you want to protect? Now, for me, I'm quite a risk-averse individual, so I would want, if I knew that that lending had a personal guarantee on it, I would want it protected. But at the same time, I would want to protect the value of my asset because I want to pass something on through the generations. So, I would be insuring myself to that effect. So understanding your portfolio position is the first point, and understanding what risks you do have as an individual, getting advice, whether it's from yourselves or from us at Caspian, from a life insurance perspective, and making sure that you understand the options, you're in an educated position, and you're comfortable with the amount of risk in your portfolio. So I'll break it down later in terms of what that specifically might look like, but every portfolio is different, and everybody's attitude to their portfolio is different. So very much an individual one. The priority for me is that you know what the risks are, you've had the educated conversation, and you've made the decision.
Yeah, I think nail on the head in terms of just identifying where those areas of risk are, firstly, and then understanding what method of protection is available, and then sorting your own risk appetite accordingly.
Yeah.
Um, definitely quite interesting there. Yeah, thanks, Mike. In terms of seeing landlords changing their strategy. We've obviously, there has been a shift to more limited company landlords, perhaps looking to restructure their portfolios. Why do you think this is, and what strategies do you think were likely to see implemented?
Yeah, I think obviously if you look at the last decade, you'll see there on the screen the numbers. So in February 2016, so pretty much 10 years ago to the day, there was 93,000 limited companies in the UK that held property as an asset in
Mhm.
in whatever form that might be. That figure last year was 401,000. So if you think about the wider SME world in the UK, there's 5 million or so SMEs. Almost 10% of every limited company now has a property asset in it, or is a property is a landlord company. So there's been a huge fundamental shift in ownership of people moving privately owned properties into a limited company structure. And in terms of ownership, it's completely understandable why everybody's done that. Makes complete sense. I think where there is a potential opportunity is for all of us is, do you understand what happens next? Now you've set that limited company up. If you have a business partner, if you and I owned a property company together, what happens if something happens to one of us? Are we set up correctly? Or do we know, what's going to happen? And do we have the finances to support that? Do we have the cash, the liquidity to support that? So yeah, there's a definite change of approach, or there has been over the last decade. It will be interesting to see, given the size of the portfolio averages and that type of thing, what that landscape looks like in another 12 to 18 months' time. Are we going to continue to see the trend increasing of the number of landlords setting, limited companies up in the UK?
Yeah, I think that's really really good point there. And then our switch is, it's massively driven by that change in tax that the government implemented. I mean, years ago, when the government first started phasing out the interest for the sole trader landlord, I was an accountant, and I remember the pain of having to explain to clients, you're not going to be able to claim back all the interest. And, let's be honest, the majority of buy-to-let landlords are operating on interest-only mortgages. Now, if you start reducing the amount of interest you're able to offset against your profits, it really affects, the ultimately the profitability of their business, and furthermore, the sustainability of the business. Without those same reductions, you're going to end up paying more tax, and before you know it, looks a less lucrative investment. That's ultimately what's driven the limited company landlords. and it'll be sort of interesting to see, how that goes and what really happens. And with regards to the sort of shift in, the amount of properties out there, due to the accounting fees, you can understand why people are putting multiple properties in one company as opposed to ring fencing these funds. However, that being said, with multiple properties in there means more debt in there,
Yeah.
and ultimately more risk. I think the average now is between 2 to 3, but based on sort of last year's figures, that is definitely trending upwards. And I think that's only a trend that will continue. Really, I think we're phasing out a lot of the accidental landlords. We're not. The government is phasing out the accidental landlords, and anyone really in the space now has got to be a professional landlord and be very mindful of their structure and their setup.
Yeah,
But
and it's really interesting that that change has been quite so holistic. It seems like everybody has followed that journey of moving from, like you say, the accidental personal landlord to much more structured business focused expansion, to get to the number of properties you'd need in a portfolio to make it effectively your sole operating business. And I think that's where we're moving to today. Yeah, absolutely.
no, certainly. But yeah, that's all the questions for me for the time being. I'll be back to pick up
Perfect.
questions in the Q&A at the end. So, if any of you guys on the webinar do have any questions, feel free to pop them in there, and we're gonna have a chat through afterwards. Cheers.
Perfect. Thanks, Shelby. So I'd like to welcome now Mike Crilly from Purbeck, who is going to run through exactly how the personal guarantee insurance works and the options that you all have available. So, Mike, welcome to today's webinar.
Thanks a lot, Mike. Some really interesting facts there from you guys. So yeah, really appreciate anybody who's turned up today. So yeah, I'm Mike. I'm one of the business development managers here at Purbeck. Just here to explain a little bit about the PG insurance that we offer for the landlords. Obviously, as you're all aware, most limited companies that have buy-to-let mortgages, they do require the personal guarantee. And that personal guarantee actually puts your personal estate at risk, not just the property. So if tenants default, there's a rise in rates, the market turns, lenders can call on that personal guarantee, which will in turn leave you personally liable. Enforcing or settling a guarantee can be very expensive and extremely time consuming. So by having personal guarantee insurance in place, it gives a certainty of recovery and protects your personal assets at the same time. And it's for a relatively small premium. You would be de-risking your portfolio and protecting your long-term cash flow. So it makes sense to have something in place to help you sleep at night as well. So just a little introduction into Purbeck Insurance. We've been going for about 10 years. We're actually a managing general agent, excuse me, for folks go, managing general agent of a company called Markel International. Not sure if you've heard of those guys, but a AAA rated Fortune 500 company. So really, really strong financial backing. Ultimately, if the PGs are called upon, it's Markel paying out. So you're in really good hands. So moving on to the next one, about a little bit about the actual policy itself. They are annual policies. They can be paid monthly also. And we can essentially cover up to 750,000, but we cover 90% of that. So there is a bit of skin in the game from a director's aspect. But if it was to go to a claim, we would pay out 675,000. You will get access to our comprehensive support service, which can be called upon anytime. I'll go into a little bit more information on that in a sec. And also there's a debt negotiation feature available as well, should the PG get called in. Premiums are as little as £100 and anything up to £5,000. So continued on from there. So as Mike mentioned earlier, our insurance is also P11D neutral expense, can be offset against their company's corporation tax bill. So essentially the business can carry the cost of protecting the assets there for you. We can also cover up to 5 directors on a single policy if the personal guarantee is signed joint and several. And we can also have multiple mortgages under a single policy as well. So the support service. So what would happen? Obviously, we try and keep the business up and running before the lenders get an opportunity to pull on the PG. So if they come into any financial distress, we can help with everything from legal advice, advice on repairs, any problems with tenancy complications and stuff like that. We're also happy to help with. So yeah, we're currently seeing, I'd say, on average, about 150 policies protecting basically over 200 directors on a monthly basis, which is looking at about a 25% increase from what we seen last year. Now, that's a record number of applications associated with commercial mortgages. So you can see by the levels of applicants that there is a huge need for landlords to protect themselves. Most limited company buy-to-let mortgages require the PG. So yeah, that's pretty much what we offer. And yeah, I'll hand back over to Mike if you got anything else to go, guys. Thank you.
Thanks very much, Mike. Really interesting to hear, the growth and the amount of, landlords or company directors now that are seeing the risk that the PGs have, and mitigating that by, ensuring it and offsetting it and making sure that, if anything does happen, that, those liabilities are covered. So I want to change the direction of the conversation slightly now and just focus on protection planning for landlords. So here at Caspian Insurance, just to give you some background, so we are a directly authorised life insurance broker. So we're authorised directly by the FCA. We've been going for just coming up 10 years in August, and our business model is very much supporting and advising business owners of all areas and all types and all sizes. We have a large team full of experienced business protection advisors. They deal with business owners all day, every day, so they understand the challenges you face, they understand the risks that you have, and they will be able to advise you accordingly. So how I want to sort of structure this today is just to focus on 4 areas for you guys as landlords. So protecting the asset value in the portfolio, mitigating any potential inheritance tax liabilities that you may have. I want to focus on the succession planning, probably one of the things that is, not on everybody's radar right now. But if it is, then, we have solutions that can help you with that. And then obviously, as important as anything is making sure that everything is set up correctly and you are offsetting any premiums for your life insurance or your income protection or your critical illness. So if anybody has any life insurance in place at the moment, or income protection or critical illness or anything like that, and the business isn't paying for it and you aren't set up, then I'm going to put a link in the chat later, just so that you can contact us, so that we can make sure that is set up correctly for you. So, we've seen a huge number of, we're not dissimilar in terms of inquiries. We get about between 50 and 60 protection inquiries from landlords a month now. So, it's a huge part of what we do, and it's an area that needs bespoke advice, because there's a lot of you on the call today. All of your portfolios and your personal circumstances will be different, so it's our job to understand that, make sure that the solutions we give you fit to your personal circumstances. So let's have a look at the risks in your portfolio of not having protection in place. So the most obvious one is the debt. So if you think about your own portfolio, how much unprotected debt is in that portfolio, and how much are you happy with? Because unprotected debt means financial insecurity for your family, for your dependents. So having the right protection in place will make sure that your own circumstances, your own income, your own liabilities, your own debts are protected. Where we've seen a lot of the conversations going over the last sort of 12 months in this area has been around understanding what happens on death. So yes, there will be a lot of fixed assets in your portfolio. There will be assets in there, but depending on your own individual circumstances, what liquid assets do you have on death? And that's where life insurance comes in, because we've seen the the area, probably the biggest area of growth across financial services over the last 18 months or so has been around inheritance tax. So historically, things like pensions, shares in businesses were, excluded from people's estates and therefore didn't contribute to your inheritance tax liability. That now changes from April. And then what that means is more landlords, more business owners are going to fall into the inheritance tax trap. So they are using life insurance because if you set it up correctly, it's kept outside of your estate and therefore will provide liquidity on death, and it will be able to mitigate and potentially be used to pay your inheritance tax liability. And one of the areas that people talk about to me a lot when I speak to landlords is about do they want to dismantle the portfolio? So, you built this portfolio up, if something happens and, your family need to sell those assets, do you want your portfolio to be dismantled? Are you happy with that risk or that consequence of not having protection in place? But having the right protection in place will protect the full value of your portfolio. So if your portfolio is worth whatever it might be, losing 20% or potentially even 40% of that to the HMRC for inheritance tax is going to significantly devalue your portfolio value. But then that will have a knock-on effect because the lenders will react because they will see a portfolio that is struggling and isn't strong. So they won't be able to, grow or lend wherever that portfolio ends up. So I want to turn now to kind of put it into practice of what we see. So like I said before, I'm quite a risk-averse person. I go from 5-year fixed rate to 5-year fixed rate, regardless of what it's on, because I just like to know where I am. But everybody's attitude to risk is different. So the conversations I've had with landlords over the last sort of 2-3 years have all been around protecting the asset. And what I mean by that is, if you think about, I'm going to use an example here because it's Friday and I need easy maths, but if we say that the value in your in your portfolio is £1 million. So in that £1 million, you've got 25% equity. So 250,000 is equity, it's asset. And then the remaining 75 is debt, is borrowing from the lenders, which is fine. It's not an unusual, amount. What I tend to do is I will talk to landlords and go, right, how much risk are you happy to take and how much do you want to insure? And more often than not, it's usually falls down, I want in one of two ways. I want to protect everything. Fine, no problem. We can do that for you. I don't want that debt unsecured and unprotected. Or they fall down and go, I'm actually quite happy with half the value of what I've got as a debt to keep as risk because I think my portfolio is strong, the properties are good, the rental is consistent, etc. But I do need some further financial security and I want to protect half of the remaining pot. And so in this scenario, if it's £1 million for a client, you'd end up with 375,000 of life insurance, 375,000 of, unsecured debt, unprotected debt, and 250,000 of equity and asset. So that gives your portfolio a much more balanced look in terms of risk. So if you think, of your own individual circumstances for a sec, where do you fall on that line? Like where is your comfort point from risk and from protection? So combining the two will give you, an idea of the options that are available, how we can help, but tailoring it to your own individual circumstances and your own individual attitudes to risk. And then what about the future? So I mentioned this before. So, you will all have set up your own limited company, everyone on the call today. So, if something were to happen to you, Shelby and I touched on it earlier. So if Shelby and I owned a property business together and as he's not here, I will kill him off. So Shelby passes away. how do I get those shares and the asset value of those shares back into the business? Like, have you had the conversations? Do you know what happens on death to your shares? Have you followed the journey? Because what you will need at that point is cash, because you will need to be able to fund a buyout if you have a business partner. Now, we have solutions in place that can do that for you, providing the cash, but also providing the legal documentation that goes with it. So whether you are wanting to provide liquidity for your family, wanting to provide security for yourself from a business owner perspective, or whether you're starting to think about, actually, I'm going to fall into the inheritance tax trap, we can help with all of those things. So I mentioned it before, inheritance tax is probably the most talked about thing in financial services at the moment. The volumes of protection policies being written to protect people's upcoming potential inheritance tax liabilities has exploded exponentially over the last 18 months. So, if you haven't seen it, it's worth speaking to your accountant, speaking to your IFA, finding out. I mean, there's loads of tools you can get online that will give you a rough idea of what your liability is, but so many more people are going to fall into that trap over the coming next 3, 4, 5 years. The predictions are that at the moment there is I think it's 8.8 billion paid last year in inheritance tax. The prediction is that by 2030 that figure is going to be 30 billion. So making sure that you're not one of those people, and making sure that you understand your position, and how there are solutions out there that can help you is really important. So thinking about the future is definitely something we can help you with, in the same way that protecting your assets. And then finally, arguably for most business owners, the most important part of this is making sure that it's set up correctly. So, you are fully entitled to set these policies up as a business expense. As long as they're set up in the correct way and you've taken advice on it, you will be able to claim tax relief on your premiums for your life insurance policies. You will be able to pay them from your business account. And all policies that we set up will be placed into trust and therefore kept outside of your estate. So they won't, if you set it up incorrectly, they will go into your estate and therefore add to your inheritance tax problem. So making sure it's been done correctly, making sure it's set up, will keep all of those policies outside of your estate and therefore reducing your inheritance tax liability. And then the final cherry on the top of all of this is that because of the pension changes back in 2006, these policies that were created are not classed as P11D benefits for you as an individual either. So, hopefully I've covered there in the last sort of 10, 15 minutes or so, why we see landlords getting advice in this area, the options that are available to you, and making sure that, if you understand it and you set it up correctly, then these policies can add real value to your portfolio. So thank you very much for listening. I'm just going to bring Shelby back in now just to cover off any questions we've had. Before I do that, I've just popped in the chat the link. If anybody wants to know more about anything that we've discussed today and wants to have a chat with one of our dedicated advisors, either from Caspian or from Purbeck, then just click the link that I've just put in the Q&A now. It only takes 30 seconds or so to fill it in just with your name and contact details, and we'll be in touch next week. So yeah, thank you very much for listening, and like I say, Shelby, if you come back in so we can wrap up any further questions.
No worries at all. Recovered from my untimely death. So
unfortunately, sorry about that, my friend, but it was either you or me. So, and given that I'm significantly older than you, I think the probability probably would have been the other way around. But as I was talking, I took the opportunity.
No worries. Both of you raised some really good points there. Identifying some of those areas for risk, whether it be PGs, inheritance tax, those kind of things, and some good methods there for how to mitigate from those risks. So no, great points. One thing I did want to pitch to you there, Mike, was thinking about sort of the next 6, 12, perhaps even 18 months. What do you think some of the biggest challenges that the landlords, limited company landlords might face in terms of growing perhaps looking to grow their portfolios, maintain their portfolios, or even just some of the pressures that they might be facing today, interest rates, lending, these kind of things?
Yeah, sure. I think, the more established landlords are still acquiring at a really good rate. The data backs that up, the conversations back that up. And I think we've reached a kind of new status quo in terms of interest rates, and the lenders are still fairly comfortable with buy to let lending. It's one of the areas of lending that's kind of stayed a bit more consistent over the last couple of years. So we have seen quite a bit of turbulence over the years, but at the same time, it's the opportunity now for expansion is really good. I think there's geographical issues as well. I think there's certain areas of the country, from speaking to landlords in different areas, that certainly geographically there's more appetite and more positivity and ambition in certain areas. Obviously with different tax rules in certain parts of the countries as well. And the rules in Scotland are different to the rules in England, for example. That plays a part in it. I think making tax digital is going to be an obstacle over the next couple of months. I think that from a time and a cost perspective for everybody, getting that done correctly and quickly, that seems to be something that people are focusing on and talking about quite a lot. And again, I think the interesting metric for me will be to look at how many new entrants are in the market over the next 12 months. I think it's going to potentially plateau a little bit. I think if you think about first-time landlords now, your margin for error is quite small because you've got changes to the Renters' Rights Act. You've got still got high stamp duty to pay. You still need minimum 25% LTV. So it's when you combine all those things, does it then potentially favor the more established portfolios? I think it probably does. But fingers crossed for another good year of lending and more expansion for those that are in it, because it's a hugely valuable part of the ecosystem.
Yeah, no, I think it's very, very good points there raised. And I think I support your thinking in terms of as opposed to seeing those new landlords come into the market, we're going to see the existing landlords expanding their portfolios. However, like you've identified, if you're expanding your portfolio, you're expanding your your unprotected risk, and that's when those numbers start to get higher. It's easy to gloss over the fact that you're talking equity, but ultimately equity equates to years and years of hard work.
Yeah.
To ultimately put you in that position to have the investment. And
Yeah.
with such large investments, it depends so heavily on cash flow, because ultimately a lot of that the funds in the business are tied up in that fixed asset, like you were saying. So these changes that we're seeing with whether it be increased taxes, whatever it might be, is putting restrictions on cash flow, making it slightly riskier market. Particularly if we're thinking about the changes to renters' rights, like you said as well. It only takes one or two things to go really wrong, and if you haven't got the right support behind you, you can find yourself in a bit of a sticky situation.
Yeah, definitely. And we've had a really good question come in from Peter just now, that says, I have a limited company in which I am now the sole shareholder, which only has one property in its ownership, and there is no income in this asset currently. How can I reduce IHT liability on this at minimal cost, as there is no money in the company as such, just the property asset? So the difficulty with that, Peter, is paying the premiums. Are you going to be able to fund the premiums out of that business? It depends on your other circumstances, but I think there's definitely something we can do. It's just really understanding the specifics of your own circumstances outside of that limited company as well. So probably worth us having a chat on that, but there will be a way that we can help you reduce that liability, no doubt. So yeah, we'll be in touch on that, Peter. No problem at all. Thank you for the question.
Yeah, I don't think we've got any other questions. But as Mike
else
said,
come in, no.
I can't see anything. Don't think we've got a massively talkative audience on today. But if any of you do, as Mike said, if any of you do want to chat through anything else, feel free to reach out to any any of us. Our contact details will be around somewhere or other. But you can always find me on LinkedIn as well.
Brilliant. So finally then for me, thank you very much, everybody. I hope it's been useful. I hope it's given you an insight into what we're seeing for landlords and their behaviours. We'll be in touch over email over the next couple of days just to, answer any questions you might have. Any feedback would be greatly appreciated. We work very closely together with the guys. So, anything that you would want to hear more of, then by all means let us know and we can do it for next time. But thank you very much. And I'm going to bring this webinar to an end.
Cheers.